Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, November the 27th. The year's 2019. Let's talk trading the only way. Yesterday, I admonished traders to quit looking for the easy way. You have to find the only way. What's the only way? It's the way that works for you. I present, I don't know, a handful of methods or more. And for some traders, they work like a charm. They take one of the methods, they trade it every day, they're making money. Others, they'll pick a method and they'll struggle with it. It just doesn't work for them. So, what you as a trader have to do, you have to find the way that works for you. And that's the only way you're going to be successful. And of course, that way is the method. But then the ball is in your lap. The ball is in your court. You have to make sure you execute and perform. You have to apply risk and money management on each and every trade, because you cannot afford to lose more per trade than what you're willing to lose per trade. That's money management. Okay? Now, fellow traders, boys and girls, you all know by now that these videos are for educational purposes only, and your results may differ from mine. And that trading is risky. You can lose all of your money. Now, if you need advice, financial advice, trading advice, let me tell you, you should seek it from an accredited financial professional. That way, when you lose your money, you know you got your advice from an accredited financial professional rather than somebody making YouTube videos or posting trading strategies on a trading forum out there on the internet. Okay, that's out of the way. I'm going to try and speed that part up. I just took over 2 minutes or so on the disclaimer and the money management, since I think some of you traders really want me to start diving into the methods. Well, the gap fill method, fading the gap, that weekly gap between Friday's close and the first trading day of the week's open. Usually it's Monday, sometimes it's Tuesday. You see here, only 2 gaps haven't filled. On the weekly, you can see the dollar yen really popped up. We're 30 pips over that weekly high. So if you're taking the breakout or that wick zone trade here, you can see there was pips to be made. And we are 1 pip off of the weekly high at the moment. And we are only 27 pips below that yearly open. And you can see we're outside and above the opening range for the week, and we're inside the range for the opening day of the year. Above some opens, and you see we just broke out of the first trading day of August. And we broke out of that weekly inside bar here. Now, I've been showing you these trades. Once again, simple horizontal line trades. And they work for some people. There's 1 or 2 traders out there, I get emails, they are just loving this inside bar trade. They think it's just so cool. They think it's the simplest thing they've ever seen. And they're just, you know, they're making pips. Others struggle with it. Okay, it's the day before Thanksgiving. We've only got 2 pairs over 100 pips in range. And you can see here these ranges, traders are just taking the time off. So the traders that are here, it looks like they're having fun moving prices around. We've got a weekly highest open right here. That looks like at 33.80, 33.30, 109.383. And you can see here on the H1 chart, we took out the pivot because the pivot was right by the open. You see we still have a missed pivot down here. Future pivot 109.26. Rat zone. I made a modification and I'll be posting it, where if the range is too low, you have a caution sign. Maybe I should have used the yellow right there. Caution, range too low. On the pivots, you can see we're getting close to the weekly R2 at 109.44. We hit the daily R2 and passed it at 109.35. So we've got 2 missed pivots this month, one back in October, one back in September, and then you have to go all the way back to May to see these missed pivots. And there's a few traders that are really enjoying trading the pivots. But you see, they found something that works for them, and that's the only way for them. You have to find your only way. Price action, stuck between the 10 and 20 for a while, and price had enough. And now it's moving. It's between the 40 and the 30. Wick zones. This is just one time and out. And there's traders still struggling with the wick zone. And here's one. Opened here, went below, turned around and went right back above. So a scratch trade there. Or if you put your stop loss, if you waited all day, as you can see what price is doing. Once again, if price isn't moving your way, you see higher high, higher high, higher high. You know, it's time, sooner or later, you got to say, you know what, this trade ain't working. Time to exit. Once again, crossing these horizontal lines. Previous month, previous day, previous week's high, all got taken out today. Right now on the tick chart, you can see not much is happening. And you can see we're just kind of stuck right here between, what, 41 and 36 since I put this, loaded this profile. You can see prices is pretty much flattening out. You can see out of that wick zone, that weekly wick zone right there. ATR, okay, here's a great day to talk about ATR. As you can see, the dollar yen is in this upper ATR zone for the day. The blue is the week, the brown is the day. Now, this daily open plus ATR4. ATR4 was the minimum. In other words, what the indicator did was it calculated what's the value of ATR2, what's the value of ATR3, what's the value of ATR4, all the way up to what's the value of ATR14. And it says, okay, which one's the biggest? And in this case, ATR11 had the biggest value. Which one was the smallest? In this case, ATR4 had the value. And I hope the traders that are having problems understanding this are watching this video. So you can see here, here's D1 open plus ATR4. So from the open, you add the ATR4, which was the minimum out of those 13 values, 2 through 14, and you plot a line. And then ATR11 was the maximum out of those 13 values. ATR for 13 periods, that's 13 daily periods, and you add that to the open and plot a line, and then you shade between it. That's the ATR zone. Now, remember, when you're looking at the range, here's the range, 39 today, average range is 45. If you take half of 45, let's call it 28, and if you say, okay, open plus 28, open minus 28, if the high and the low hit the open, you'd hit the range, but that's not usually the way it works, because usually it's going to be going one side or the other, and so usually it's going to hit that 50% ATR, open plus 50% of the ATR, okay? And so you can see right here, it hit it, and then it went on and moved into the ATR zone. And there's the weekly zone right there. And you can see from a week standpoint, it hit and exceeded half of that ATR. So the range here is 80, average range is 140. Okay, so you take half of 140, that's 70, and you can see here that we hit it. I hope that explains this ATR, because there's a few traders out there that are just really having a hard time with the concept. And I don't mind you asking me the questions over, because if you don't understand it, then I got to figure out a way how to explain it so you can understand it. So that's my challenge. Your challenge is just to understand it. So you see here, if I open it up, you can see a little bit clearer here. So open, half plus half the minimum ATR plus half the maximum ATR. That's a target when you're trading open, away from the open, like a buy zone trade. Okay? Then when you get to the ATR, this is when you start looking for rat reversals, holos, and things of that nature. So you can see here, barring unforeseen circumstances or price movement, we might have a new holo this hour, because this is the previous holo right there. And I think we can show that. Where's the holo? Right here. That's the weekly high, H1 highest open, which happens to also be the daily H1 highest open. Since it's making new highest opens on the week, it says weekly as opposed to daily. Trying to remember if there was any other pending questions out there. Okay, once again, choosing pairs based on swap, long yen, taking advantage of the positive swap. And on the euro, you probably want to look to short, take advantage of that negative swap rate. But if you have really tiny accounts, it doesn't really matter much. Here we're looking at the high to open to low. Okay, so you can see how many pips you can make trading away from the open. Frequency distribution of the high minus open. And this is on the H4. And you can see here, this big H4 bar considered at a freight train. Price is just chugging along like a freight train. And this was that interesting option somebody wanted to have for the candle colors. And I'm thinking about adding another one, but it might be kind of hard to display. I was thinking about having, you could do a pattern match, higher high, higher low, lower high, lower low. But then you could also have higher open, higher close, lower close, and a whole bunch. But putting that up here would really be, there's just not enough screen real estate. So I got to figure that one out. But I think it might be fun for sub traders to have that one. And once again here, looking at the dollar yen. Okay, fellow traders, that's going to wrap it up. Remember, don't look for the easy way, look for the only way. And the only way is the way that works for you. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks and have a happy and safe Thanksgiving holiday. And remember, the markets are open.